Firstly, a warm welcome to our Spotlight on Venture Capital. I'm Nick and I'm part of the Career Service team, and I'll be chairing and handling the initial questions for this session. Perhaps in the first instance, it would be great if you could give us a brief introduction to your background and your current role and your career journey to date.
Yeah, so thank you, Nick and team, for inviting me. It's my pleasure to be here, and thank you everyone for joining us. I am the CEO and co-founder of Start Codon. We are a venture builder that does pre-seed investments in life science companies. So this is anything including therapeutics, diagnostics, digital health, or med tech. So very much human focused, but we're not exclusively human, very healthcare centric. My background is I originally completed my PhD in Clare College in cardiovascular medicine many moons ago now. And after that, I embarked on a series of really exciting jobs that led me to my point today. So my first job was working in consultancy at an innovation consultancy, designing new products for the fast-moving consumer goods market. Then I worked in tech transfer for a bit in Cambridge Enterprise, learning how to spin out companies and how to do diligence. I left and went to biotech and was running my own biotech company, Cambridge Epigenetics. I was there for 6 years and CEO for half of that time. We were developing new tools for discovering epigenetic biomarkers. And then I was approached with an opportunity to set up Start Codon. And the unmet need that we recognized, my partners and myself, my co-founder, Dan, was that there needed to be someone who could fill the gap between later stage traditional VCs who are expecting companies that are robust with a business plan, a team, have an idea of the direction they're traveling. And on the other side, you have predominantly, but not always, academics who've never done it before, or indeed people who are working in industry who've never set up their own company, looking for support to craft that story, to do the killer experiments, to become an investable entity. Previously, they would stare at each other and say, well, give me the money so I can do this work. And the venture capitalists would say, well, do the work and I'll give you the money. So there was a gap, and that's where we squarely sit.
Fantastic. That's really interesting. And so you're bridging the gap between the two main operators, if you like, within the venture capital market at the moment. It'd be really useful, I think, if you could give us a bit of an overview on what how you would define venture capital itself. And I noticed from your website that you describe yourselves as an accelerator. So maybe a little bit of an overview of the different types of business models and how that all fits together.
Definitely. So the pretty broad brush family in venture, when I say venture capital, the idea is that it's risk capital where an individual organization is investing into a startup and expecting a return. Financial return, but increasingly impact returns as well. So you have two different camps. Your traditional ROI financial investor who says, I need to make a 10x return on this investment. Do I see a path to that? And then you have the investors who are about, I need to make a 10x a level of impact. So even if the financial return isn't as great, they're more about, can you measure the impact you're having? And impact can be things, the number of lives saved, the number of houses that have been, carbon, let's say, neutral, things like that. There are a lot of different ways you can measure impact, societal impact, environmental impact, and so on and so forth. But in both cases, you typically have a pool of capital called a fund in which you have limited partners. And those limited partners are putting their cash into that fund. And then they have a management group, the general partner, who they're entrusting to invest in on their behalf. A slight tweak to that is if you have the SEIS, EIS kind of funds, they're slightly a different setup. But even in that case, you're taking somebody else's cash, you're putting it into a vehicle, you're committing it for X number of years, up to 10 years, and you're expecting the management team, the venture capitalists, to identify the right opportunities to invest in that they believe they will get a return in that period of time. And that's fundamentally what VC looks like. And on that spectrum, you have early stage venture builders like Start Codon, where we are coming in at a very risky moment. The team hasn't really been fleshed out. The business plan is a bit wobbly. There's everything to play for, but it's exciting for us, and we want to get in early, and we're pre-seed. Then as you go through the different stages, seed, Series A, and beyond, you have different flavors of investors. Most accelerators tend to be on the earlier side, like we are, where they're really trying to craft that narrative, but you're constantly changing and pivoting and evolving the story as you go. So just because an accelerator is at the beginning doesn't mean that there aren't accelerator programs that help companies that are more mature. When I see something is quite nascent, a seed investor might want something that's a bit more fleshed out. A Series A investor is hoping to grow and scale the company. and then so on and so forth. Then you end up with what they call crossover investors, which are like Series B plus that are hoping to prepare the company for an exit of some sort, an IPO or an acquisition. So the whole gambit is, can I choose the right companies with the right teams, the right market approach, etc., invest in it, hope that is a great prospect, that other investors will come in after me, and that there's an exit, either an acquisition or an IPO going to the public market, so then I can make a return for my own investors.
So, thank you for that overview. That's really useful. Would you describe so as an early stage investor, the role and the things that you would do on a day-to-day basis? Would that be different to what you would expect to happen within a VC that would get involved in more mature investments?
Definitely. So I'll give you an example of what we do, and there's a Venn diagram of what is same versus what's a bit different. Because we're starting from scratch. So we do deal sourcing. Everybody is looking for a good deal. So I have a wonderful team, and one of my colleagues, one of his main roles is to go out and find opportunities. Sometimes opportunities come to us, but we still have to do a lot of work to find them. So that means talking to tech transfer offices, going to pitch events, speaking with students, speaking with other investors, and identifying the best opportunities. Once you've found them and they fit within your investment remit, that's something else to be clear. Not every investor invests in the same things. I told you our remit is quite broad. Some investors only do therapeutics or only do digital health. We're quite broad because we're early. So if it fits within our remit, it's not a flying car, it's actually life sciences. Then we say, is it a good opportunity? And we do what is called due diligence. And that involves us and our partners really delving into the team, the technology, the market, the competitive landscape, and also the timing. Because sometimes it's a great opportunity, but the wrong time. So we have to really tease that out. And that's paper exercise. So of course, things like Googling and reading publications and having loads of conversations with the founders or potential founders, but it's also bringing in third-party experts. So it could be somebody who's a clinician, someone who's been in industry before, other investors who might invest after us, and bringing all that information together to make an assessment of whether or not we want to invest in that company. Then you go through the other kind of more administrative task of negotiating the IP rights, negotiating the investment docs, so on and so forth. And then we are sticking with these companies for about 18 months, really holding their hands to get them up and running to where they need to be because it's so early. Now, in that Venn diagram I described, a bit later stage investor, usually they're judging you on what you've achieved. We're judging you more on potential because you were just starting, you're so early. And we're expecting you'll pivot a couple of times, maybe go into new directions. By the time you get to Series A, they're expecting that you have a robust team, you've developed your product or proposition, you've demonstrated it and hit your key milestones, and that they can be judging you on things. Sometimes is if you're pre-revenue, they judge you on potential. If you're revenue generating, they judge you on forecast. How much more revenue can you bring in? What's the full addressable market that you're pursuing, and what's the sizable obtainable market that you can actually grab? And what that means is we have different risk appetites. So I do things that are very risky, but we're hoping the reward is high. Whereas the further you go, maybe the risk appetite, depending on who you talk to, is less. There's an overlap, but we have a different tolerance and view when it comes to assessing companies.
Again, really interesting to get that. And you mentioned risk. From someone working within the environment, is that a comfort? Is it important to have a comfort and be comfortable with taking high risk?
You have to be, because this is risk capital. It's the idea is that you're putting your money into something that's probably half baked, and you hope that you get it out. It's not as established as, let's say, if you're a private equity firm and you're investing in a company that has 10 years of operating experience and you can do a complex analyses and really get an understanding of what direction it's traveling. A lot of this is faith and hope and gut and assessment and projection. So there are all these things, and that just screams risk. But the important thing is, and for anyone listening, whether you want to be on the founder side or the investor side, it's about mitigation. That's really the name of the game. I could point out loads of risk for everything that we do or could do. It's, do you know how you would mitigate those risks, and what are you doing about it? So rather than trying to hide and tell people you're the first or the only doing something, or it's incredible, it'll sell itself, those are red flags to us. We say nothing ever sells itself. Nothing's ever risk-free. What I want to know is, wow, here's a first-time founder, but that's risky. We will bring in somebody who's experienced to be their chair or to be their co-founder to de-risk, to mitigate the risk. Let's say de-risk, to mitigate the risk. Or there's a competitive market. Well, we think that for these reasons, the technology is strong, but we'll help them raise maybe some grants to address that technical risk. So it's all about mitigation. So identify the risk and mitigate it.
Thank you. Thanks, Jason. That's really good. And in terms of you mentioned the sort of roles that and things that you do on a day-to-day basis. To what extent are you drawing upon your academic background while you're doing that, and how important do you think that is for anyone that would be joining either your firm or going into life sciences venture capital?
I think, is a huge boon. Having done my PhD taught me how to do research. You don't have to have a PhD to get into venture capital. You can come at this from any walk of life you can imagine, but that curiosity is key. Essential for every good VC I know. They're extremely curious. They want to learn more constantly. And not just for the companies they're assessing. It's not a 9-to-5 job. I'm always reading and speaking to people and learning and just trying to absorb as much knowledge as possible. And life scientists, especially academics, naturally, you wouldn't have gotten this far as a student if you weren't curious and wanting to learn more. So that's so important. And then, of course, you have the hard skills of technical expertise. I don't have to be a technical expert in every company that we back, but I do have to have critical thinking skills and the ability to engage with technical experts and have a meaningful conversation. And that's something else you pick up in going through academic career is you know how to engage with others. You know what you know, but you also are open-minded and self-aware to know what you don't, and you know who does. Engage with them, get their opinion. So nobody is judging you in the VC world of being like the expert for diagnostics or the experts for antibiotic therapeutics. Though they will judge you is, who did you engage with? What was your thought process? How did you pull that all together? Very similar to what you do in a master's or a PhD thesis. You do your research, you cite your sources, you have a hypothesis, you pressure test it, you make a conclusion. So that scientific method is exactly what we do. We just call it something fancy, due diligence.
And is there an importance? You were talking about drawing that information from different sources. Are you having to use what sort of skills are you using to do that? And I mean, not just technical skills, but personal skills. Would you be drawing upon to get that information?
So I'd say there's two main buckets: secondary market research and primary market research. Secondary market research is being able to find things, delve into PubMed, look at papers, read some research reports, et cetera, look at websites. Those are things that you can do on your own. Pretty low-hanging fruit, but they're very intense. But usually it's a set body of work. Primary market research is what I think is golden. It's going out and talking to people. That's where your emotional intelligence and your communication skills are key, because people rarely, especially potential customers or partners, they rarely tell you what they need. And something very important for understanding if a prospect is investable is what are the unmet needs, but also what are the unmet wants. And so what I've learned from experience is people usually show you what they need, but they tell you what they want. So if I were to ask somebody, do you think you need this? They might give me one answer. If I say, can I observe you as you work to really understand what it is you do? Can I shadow you for a day? Can I really get a holistic picture? That's when you figure out what they need. And that sweet spot of a company that's addressing what people want and what they need, that's where I want to invest. And that really comes from talking to lots of people and asking the non-obvious questions. Too often we get comfortable and say, I have a set series of questions, here's a survey, and here's the answers they gave me. But when you understand the nuances of how you ask the question can influence how people respond. A lot of founders get in the trap of self-fulfilling, like kind of an echo chamber. It's like they have a confirmation bias of asking the questions in the way that gives them the answer they're looking for. That's no good. So you have to be able to objectively engage with people, think a bit out of the box, and use those communication skills.
Really useful insight there. Thanks, Jason. And coming back to your career path, and how you described your entry into entrepreneurialism and into venture capital. You've said already it isn't necessarily a typical path, but do you have any advice for people thinking about moving in this direction in terms of the various different routes that they could use to get into it? And also, what does an entry-level role for somebody going into venture capital look like? Sorry, that's 2 questions.
That was perfect, but they're matched questions, so I'll take them in turn. Number 1 is, what do you need to do? Talk to people. All of my jobs and opportunities, except for one, have come from my network. Getting to know people, showing them what I'm capable of, and them having me in mind when an opportunity pops up and they put it on my plate and say, here's a great opportunity, Jason, I think you should consider it, and I'll give you a reference. It comes from knowing people. So first, of course, you have to always deliver, because just knowing them doesn't mean much if you aren't good at what you do. So you always have to make sure you're delivering at whatever role you have, and make sure that you get to know people, get to know founders, speak to the investors, understand the community. And that way you will have not only an insider's view of what's required, then you'll know how to pitch yourself when you're applying for a role or a job. There are certain things you can do. Some people go in the route of finance and get into venture capital, so maybe they go work in the city. Others go into management consultancy, so the big 5 like the BCGs and McKinsey, etc. Others go the more operational route, like I have, which is I was in a startup and was building it, and so that operational experience is what I leverage. Others go in another side. You don't have to start at the top and build your own fund, but you could raise your own fund. But you could also come in as an analyst. So usually in VC firms, you have multiple layers. You have analysts, associates, senior associates, principals, partners, general partners. And at each one of those levels, particularly at the analyst level, they usually are looking for somebody with a deep technical background who knows how to assess. It could be financial technical background, it could be STEM, doesn't matter, but you know how to assess and understand opportunities. So do participate in entrepreneurial events, business plan competitions, internships if you can get them, loads of ways to get experience. But first and foremost, build and nurture your network, get to know people.
Yeah, that's fantastic. I mean, networking comes up an awful lot actually as a key skill for people to develop. So it's really useful to hear that from you as well. And it sounds like there are opportunities to go directly into venture capital in an analyst role. How would you describe that role on a day-to-day basis? What sort of things would you expect an analyst to be doing?
So I think there's the nitty-gritty, which is the due diligence and deal sourcing part. So those analysts are the ones who are basically writing up assessments and reports for an opportunity for the associates, et cetera, to consider. So if you're an associate or an analyst, you are going to be the one at the cold face, listening to people pitch, doing competitive analysis, primary and secondary market research, synthesizing all that information into a clear report and a recommendation. And then as you go through the ranks, you get closer to the business itself. So as you mature, you might be able to be an observer on the board. You get even higher, you might be able to get a board seat in one of the companies you back. You might even be a partner in the fund and help raise the fund yourself, depending on how your career goes. But at that analyst level is, can you take all this data and information and synthesize it down into a report and a decision, importantly, a decision about yes or no, do we want to invest? And usually you end up in 3 buckets. Never will I ever invest in this. I like it, but just not now. Here's what they need to do to come back to us. Or it's a definite yes, I really do think this is a great opportunity.
And just typically out of interest, even when you invest, as you've said already, it's high risk. What's the sort of proportion of sort of success to failure that you would expect in this sort of field?
Well, I think that there's 2 answers to that. One, just a caveat. I think the field needs to change because I think a lot of money is wasted on companies that fail because the assumption is roughly 1 in 10 companies will succeed and 1 in 10 successes will be a unicorn, so $1 billion company, and that will make the returns on most of the venture funds that you see. That's kind of the general idea that most companies will fail. But I think there's an issue with that because they're not having the impact. It doesn't mean the technology was poor. It could be the team wasn't right, or the market was different, or something else could be done. So imagine the billions and billions of pounds being invested in companies that are expected to fail. That's a broken system, in my opinion. But that's what the expectation is. So I think there's a lot of room. Something we're trying to do at Start Codon is change that trend. If we have the right companies and the right backers addressing the right needs in the best way, we feel that we can have hit after hit after hit when it comes to companies that are really having an impact and translating into the real world, as opposed to assuming, oh, most of them will fail. A couple will be good, and one of those will be a unicorn, and that's a great job. Impact investors have a different mindset as well. They want every company they invest in to have some kind of positive societal impact. It's not good enough to think that most of them will fail.
Yeah, no, that's really interesting insight. Out of interest, what do you find most rewarding about your role?
People, more than anything, people, because I love people. I love helping them. I really like Barry Gordy is somebody that I admire. He founded Motown, I should say. And one of his quotes is that he felt he had a talent for recognizing amazing skills in people that they never knew that they had. And that's something that I feel I can do. I meet people every day, especially the ones who don't know just how brilliant they are. And I love helping them see and fulfill their true potential. That's what makes me so happy. So usually those are founders, first-time founders. Maybe they've had a lot of doors shut in their face. Maybe they've never seen anybody who looks like them or comes from their background, who has a company who's been successful. And I'm here to tell everybody and everyone listening on this call and watching this video later that you too can do it. You just have to find the right support.
Fantastic answer. Thanks, Jason. Brilliant. And just to balance that, what do you find most challenging about your role?
Oh, I'm a very hands-on person. So a challenging thing with VC is a bit like consultancy. You're in an advisory role. Now, there are some venture builders where you're very, very hands-on, and we're pretty hands-on to Start Codon, but at some point we have to let the birds fly out of the nest. And there's some great opportunities. And I keep thinking, oh, wouldn't it be great if I could do more, but I have to make sure that I'm an advisor, I'm giving my advice, I'm trying to support, but from the back, and let the founders and companies do their thing. So for me, that's a challenge because sometimes I really want to get in and get involved. So I have to restrain myself from getting too into the weeds.
I suppose that's perhaps a function of having come from an operational background yourself. You know when it's going wrong, and you want to get involved. And that's really interesting.
Exactly.
Thank you.
Yeah. So I would say anyone listening, if you're thinking about this role, in the same way, if in consultancy you do a project and then you go into the next project and the next thing, you have to be the kind of person who enjoys that. If you think you'd rather be focused on one thing and do that at least for a significant amount of time, then it's not necessarily the role for you.
In terms of the routes into venture capital or entrepreneurialism, is there anything you mentioned briefly the clubs and societies and things that people could get involved in? Have you got any specific advice for things that people could be doing right now in Cambridge to explore these opportunities and to test their skills?
Definitely. So there are multiple organizations around on the entrepreneurial side. I'd say get involved in programs at the Judge Business School, like Enterprise Tech. It allows you to work as a kind of mini consulting team on assessing a technology or a company, figuring out their go-to-market strategy, doing due diligence, essentially. And then off the back of that, you make a report, and is very similar to what you would do as an analyst. There's also the Venture Capital and Private Equity Society. We collaborate with them and run a program called the Venture Promoter Program, where students intern with us. We send them pitch decks from companies we're interested in, and we teach them how to do diligence, and then they present back to us their findings and a recommendation. Do they think we should invest or not? There's also the business plan competitions. If you are thinking of being operational or just getting an experience of what it means to build a company, go into those multiple colleges and student groups have business plan competitions that you could be participating in and just get the experience. My first real true commercial experience as an adult was winning a business plan competition during my postdoc. I learned so much. We didn't take the business forward, but it helped me get my next job. It helped me get insights. And then finally, I would say, if you have an opportunity, keep track of different VC firms. They often have summer internships, part-time roles, etc., where you can find a way to get that experience today.
It's really, really valuable. Thanks for that, Jason. Just one final question in our part of the process. Is there one thing you wish you'd known before you started on this path? One piece of advice you would give to your earlier self in your earlier career?
Oh, I would say there's a book I read which changed my life called Feel the Fear and Do It Anyway. And I'm not here to plug the book, but it was really helpful for me. I don't get commission. It was really helpful for me because I used to have a lot of what I called analysis paralysis. I would overthink everything. And I would always worry, am I making the right decision, the wrong decision? What if I take this job or not? What if I leave academia? And I would just tie myself up in knots and I would just be stuck. And that book said, actually, take a step back, think about what you're trying to do. What's the worst that could happen? It's probably not that bad. Come up with a mitigation strategy to balance out the risk and go for it. And know that if you fail, it's fine. You've learned something. And you can use that going forward. So if I could go back and tell myself that would be to worry less and just go for it. And don't be afraid of failing, because I love these acronyms. First attempt in learning, fail. That's all it is.
That's fantastic. Really good advice. Thank you, Jason. I'm conscious that, I don't know if Vicky is ready to talk about some of the questions from the audience, but it would be great to hear from you.
Thanks so much, Nick, and thank you, Jason, for all of those amazing insights already. I think I could ask you like another billion questions on all of the things that you've said already. But just going into what the audience have been asking, a couple of questions that are following up on some of the things that you've already said. So one person was asking if they were coming from a PhD background and specifically a PhD in science, how much knowledge in finance do you think that they would need in order to apply for entry positions in venture capital work?
I think just a basic working knowledge of finance was really exciting in today's world. And this is even much more so when I kicked off my professional career 20 years ago. In today's world, on-the-job learning is not only expected, it's encouraged. So don't think that you have to be a financial guru before you apply for a role. There's educational programs, there's courses you can take online, there are free YouTube videos. I'd recommend going to the Y Combinator accelerator library online. They have all these free amazing videos. They teach you everything you need to know about the basics of investment, how different investment vehicles work, how you look at a P&L and a balance sheet. All these things are the fundamentals of finance. Educate yourself, and then you can learn on the job, and they will support you. Don't think that you have to be some financial guru by any means.
Okay, and potentially, it sounds basic, but PhD, postdoc experience of running a budget, having some kind of a budget is a beginning, skill in that area in some ways, I would guess.
Very much so, and I tell everybody that scientists make the best founders and some of the best investors I've ever met for that reason. I'm biased, obviously, because I'm a scientist too, but just between all of us, it's because you have those skills. You know how to pitch ideas to your PI. You know how to persuade people. You know how to analyze data. You know how to assess an opportunity. These are all the skills that are fundamental to what you need in venture capital. We just don't realize it when we're doing our PhD. We think, oh, well, I'm just, trying to write a paper and convince my peer reviewers to publish it. Those are powers of persuasion, communication skills. Oh, I have to present a poster at a conference, communication skills. I have to manage a budget for my projects. I only have this much cash and I have to achieve that much. Finance.
Absolutely. That sort of thin line between academia and entrepreneurship, I guess. So, Jason, thank you. There are questions popping into the chat. So another one there's a couple actually about backgrounds. So one person asks whether it's better to be a jack of all trades or to be very specialized in one area. So in the case of your company, for example, would it be better to have someone who's got a pure biology background or have some experience in biology and a little bit in perhaps programming and engineering as well? So I guess that's a question about what disciplines we could be coming from.
I think it just depends on the situation, because there are different organizations that look for different traits. So, for example, at Start Codon, we value people who are Jacks and Janes of all trades that really can say, I have a broad understanding and therefore can look at a therapeutic company one day and a diagnostic company the next, or look at something in neuroscience, Monday, and then by Thursday I'm on cardiovascular, and on Friday I'm looking at healthy aging. So that ability to be able to interpret on a broad level is very key for what we do. In other situations, you might want to be a domain expert. So there are some funds, like the Dementia Discovery Fund, where having a deep neuroscience background would be really advantageous to them, because they're very much focused on companies in the neurospace, or in a company that is predominantly focused on therapeutics. If you've had experience working in pharma or biotech, or even your PhD doing some kind of drug discovery work, then they'll say, oh, that's fantastic. You really understand what we do, because they're very focused. There are also funds who only invest in oncology space, for example. So Emerson Collective in the States, they predominantly focus, I think, maybe exclusively on oncology. So if you can say you did your PhD in a really exciting oncology space, they'll want you on their team. So it just depends. What we do at Start Codon is quite broad. In other contexts, having domain expertise serves you. There's something for everyone.
Something for everyone, exactly. So you can leverage that specialist knowledge and expertise and that jack of all trades, as someone put it. That's really helpful. Thank you so much. And somebody asked a really interesting question here about the nuances of VC in life sciences compared with other industries.
So a couple of things. We are, especially in the traditional deep tech space, we are spending a lot of capital with a lot of risk before we have any idea if it works. Whereas if you're in the more tech space, imagine if you have a product that's going to get to market within a year and a half of development. It might be an app, it might be some software, but you can quite quickly engage with customers and see where you're going. In life sciences, if you have a research tool, then you have a faster route to market. But if you're more traditional, like in vitro diagnostics, therapeutics, etc., medical devices, there's a long time before you know if you'll have any commercial traction. So there's a lot of capital and a lot of risk that goes into that. Whereas in the other spaces, you can sell a kit, you can sell an app, and you can go quickly and determine whether or not there's an appetite in the market and then pivot. So you're much more likely to be judged on net market traction and possibly even revenue. So very different worlds from a pre-revenue, resource-intensive new drug versus, let's say, a new digital health app that can hit market quite quickly and then pivot as required.
That's really helpful. Thank you. And I was wondering, you mentioned in the previous answer to the question about what kind of backgrounds people might need, and you mentioned that there are some funds, some venture capitalists who are very focused on a specific area like oncology, and you gave an example. I just wondered if you knew of a directory or a good sort of source of information for people to start looking up some of these investors and funders.
That's a good question. I'm trying to think of a couple that we would use. Apologies, the name escapes me, but now there are a lot of directories online for venture capital. There's one in particular that lists every VC I know. The name is escaping me, but if you Google, you will be able to find the power of Google, I'd say. There's also things like Crunchbase, where you can see startup companies and who funded them. So that's also a nice way to look at it. Instead of who are the VCs and what do they do, you look at who are the companies and who's backing them. So rather than just thinking, I want to look at the long list of investors, go to Crunchbase, find a startup that maybe had a press release recently, and just find out who's invested in them and when, and then start to tease out what that means. Maybe they had some angel investment, and then they have another round where these investors came in, and then they have had a third round where new investors come in, and you can start to chart a path for what this looks like and how you have to build a network of VCs to syndicate and build around.
Amazing, thank you. Another question, which I'm going to reword slightly. We've answered the first part of it, I feel, about where you might be able to find out about other investors from. But what would you say, and it's a subjective question, I guess, because what makes a good venture capital firm? What would you look for if you were going to work with another kind of VC firm, or maybe you could talk about your own firm, like what makes that a good positive place for people starting up to come to you?
So I think there's objective and subjective. Subjectively, the people. Get to know them because we're all individuals. I think there's too much glitz and glamour in the VC world, and people start to think that this person has all this power and they're all put on a pedestal. And I'm here to knock everybody off that pedestal because we're all just human beings at the end of the day. Get to know them. Are they good people? Do you have shared values? And do you want to work with them? Do you want their money? Do you want to be part of their team that's giving out the capital? They're just people and human beings, and they're just as imperfect as anybody else. So you have to kind of really make that assessment. Then the other side of the question was, sorry, Vicky, remind me.
It was I guess what you see is making your Start Codon a good place to be, a good place to come to for investment and to work.
Yeah, so objectively speaking, looking at their track record matters. So what have they achieved? Have they had multiple funds? Have they returned on those funds? What are the types of companies that they've backed? Have they been good with those companies? I would even talk to the founders and say, how's it been working with venture capital firm X? Because you have to let the right one in. It's a two-way street. It's not just I have money and you have to beg me for money so I have powers. Also, you have a great company and I've got capital I need to deploy. Could you please make room in your round for me to come in? Let me convince you that I'm a great VC. And the best VCs fundamentally are the ones that help their company be successful. They're proactive. It should not be a reactive or a passive activity of I put the money in and I hope you do well. It is I've put my money in, and we went from being on different sides of the table to being on the same side of the table. So when you're asking me for capital, it's a negotiation across the table. But once I've invested in you and your company, we're on the same side of the table. Our fates are intertwined, and I will do whatever is in my power to support you to be successful. The best VCs have that mindset. If they just think of it as here's some capital and good luck, that's warning sign. Don't work with them.
There we go. There we go. That's a really helpful answer. Thank you. Which news sources do you follow to keep yourself up to date in the biotech life science space?
So a lot of different ones. Sifted is a great magazine. I think you can join for free for a lot of their content. So Sifted, SIFTED. And that has lots of updates, particularly in the life science arena of who's getting invested and not. Of course, I follow TechCrunch. I follow Genome Web, a lot of different sources, Fierce Biotech, multiple. Because the other thing too is not all of them deal with the same sectors or the same stage. So Sifted is quite early. Endpoints has big pharma news. Fierce Biotech has a lot of pharma news. But pharma as the main exit and partner for a lot of the companies I back, I want to know what they're doing so I know where I should be investing. Because I can see the direction of travel for big pharma. I'll say, well, my company now needs to align themselves because 5 years from now, pharma will be wanting what they've got, and therefore they align. So understanding all of those different layers is important, not just what's happening in the startup space.
So you're scoping out future trends.
100%.
Amazing, thank you. And another question, someone's asked two questions that are both really interesting. Do you fund companies that are open science, not for profit? I'll just ask that one first and come back to the second one.
They're all for profit, the ones that I fund. But there are investors out there, impact investors, who are happy to look at different models. And just Google, again, impact investors, like Ananda, there are a couple of big Society Capital. These are organizations that back funds and companies that are interested in that social impact. And I'm sure they would be happy to back that kind of operation.
That's amazing, thank you. And the second question was about your funds and where and how do you raise funds? Do you have specific investors, partners that you bring in? How does that side of the business look?
So we have a fund that's a £15 million fund, and we have 5 limited partners who gave us capital, 3 million each, that we are now investing over the course of a 5-year window in a 10-year fund. So there's a lot of numbers I threw out, but essentially I have my limited partners. They all have their different desires and kind of focus areas, but fundamentally they support us to support amazing companies. For example, one of my LPs is Novartis, a major pharma company. Also, Cambridge Innovation Capital, the VC arm of the University of Cambridge. Those are 2 of the 5 LPs we have. And they help us choose the companies that we're going to back. Roche and Genentech is also a supporter. They support us in a different way, but they also help support and choose the companies that we are ultimately in. And that's a great resource. So we strategically went out to find LP investors in our fund who would help us achieve our aims. Sometimes you find LPs and they just give you capital. There's nothing wrong with that, but we chose to find strategic backers.
Okay, that's great. And just a beginner's question, if I may, what's a limit? Why is it a limited partner? Is that something to do with responsibility?
Yeah, so they're called limited
insurance,
partners
etc.
because of liability. So there have to be clear lines between how involved they get in order for them to get the kind of financial returns and tax breaks that you do for being an at-risk capital investor. So they're a bit too involved in an investment or in the investment process. So we do keep them at relatively arm's length. So they advise us. They don't veto or determine. They help advise us about what we invest in. They can maintain their limited status, which means they get rewarded for how risky it was investing in us in the first place.
That's really helpful. Thank you to understand that, because I think that creates clarity about the space in which you're working, and that perhaps that sort of like scope and creativity that you can come at the work with. There's one more question. I hope I've got time to squeeze this in. Somebody is commenting that there's quite a lot of opportunities that are focused around PhDs and postgrads. So that bit of the question is not for you, but I think the question is, what could somebody at undergraduate level be doing, and what opportunities might there be for them for sort of graduate level entry to this arena?
There are loads. Everything that I mentioned earlier is not exclusive to PhD and postdoc. You can join the same societies. You can do the same internship. There are loads of opportunities. There are actually even some funds, like Creator Fund, that focuses on students. I believe they engage with undergraduates as well. So there are some venture funds set up by undergraduate students to get experience investing. And it doesn't have to be large checks. It could just be, 100,000, 5,000, doesn't matter. It's the experience that counts. So you'd be surprised how many organizations are out there that you could join as an undergrad as well. Don't assume that you have to wait till you're a PhD or postdoc. Get started now.
That's amazing. Thank you, Jason. I just wanted to say a big thanks to everybody who's put their questions in the Q&As. It's been really helpful to be guided by all your very, very pertinent and specific questions. So thank you to everybody in the audience for that. And I don't think we've got any more coming in, which is helpful, because it allows me to come to a question, if I can, to wrap it up, which I think I'd like to. It's at the end of our Life Science Careers Week, and it's almost the end of our time with you, Jason. And I just wondered if you could, if you were to look back at yourself at that moment, perhaps when you were doing your PhD, or you were doing that business plan in the postdoc, that knowledge that you have now, what one piece of advice do you think you might give to yourself when you look back at that moment?
So I would say that it would be good to primary market research. I think if I could go back and tell myself, is that engaging with people, and as many people as possible, even if you just have to write them cold on LinkedIn, a lot of them will get back and give of their time. Engage with people and pressure test your idea. Sometimes we have this psychological safety zone where we think, I'm looking for people who will tell me that I'm brilliant. When in reality, you need to go out and find people who tell you that actually your idea is not as good as you think, but I can help you make it better. So really embrace that constructive feedback, and be careful not to find either the far end of the spectrum where people are just negative and try to bring you down, but also the other side of the spectrum where people just, try to give you compliments and say, oh, that's fantastic, you're great, that's wonderful. Go for the constructive feedback in between and embrace it, because feedback is a gift.
That is wonderful advice, because I think it can be applied in so many different situations, from sort of having your CV reviewed, or testing out an idea for a particular job, or whatever it might be, that idea about sort of testing and learning from the ideas that you've got, and having a trusted advisor to do that with. That's just a really, really lovely piece of advice, a really wise piece of advice to leave people with. I link at the end of this session. So really enormous thanks, Jason, for all of the insights that you've shared with us this afternoon. It's been absolutely incredible.